So, you want to become an investment banker? You've heard it's a lucrative career, but what does it really take to succeed? It's not just about crunching numbers. Analytical thinking and problem solving are the real game changers. These are the skills that separate the six-figure earners from the seven-figure rainmakers. Today, I'll break down how to apply these skills in real-world investment banking scenarios. You'll learn how to think like a top performer and make decisions that could move millions or even billions of dollars. Let's dive into financial analysis and valuation. Investment bankers help companies raise capital, make mergers and acquisitions, and evaluate investments. Before making big financial moves, deep analysis is required. Think of it like buying a house. You inspect it first. Same goes for companies. Examine the financials and understand what makes the business tick. A tech startup wants to go public. They come to you to navigate the process. Analyze their financials, predict growth, and set stock price. Your analytical skills are crucial. Dive into revenue streams, profit margins, and cash flow. Understand the business model, identify risks, and determine worth. It's about connecting the dots and seeing the bigger picture. Tell a story with the numbers to convince investors. A small miscalculation could mean millions or billions. Develop strong analytical skills. Work with complex models, interpret data, and draw conclusions. Communicate findings clearly and persuasively. Your analysis is only as good as your ability to explain it. Build a strong foundation in accounting and finance. Take courses, read industry publications, and follow financial news. Apply your knowledge in real-world settings. Internships provide invaluable experience. Develop a keen eye for detail and a passion for problem solving. Succeed in a fast-paced, high-stakes environment. Remember, it's more than just technical skills. It's about developing a keen eye for detail, a passion for problem solving, and a relentless drive to succeed in a fast-paced, high-stakes environment. Welcome to the world of risk assessment and problem solving, where your ability to anticipate challenges and find creative solutions can make or break a deal. In investment banking, every decision carries a degree of risk. Your job is to identify potential pitfalls and develop strategies to mitigate those risks. Think of yourself as a financial detective, piecing together clues and analyzing market trends. Let's say a retail giant wants to acquire a smaller e-commerce company. On the surface, it sounds like a match made in heaven. The retail giant gets a digital presence and the e-commerce company gets access to a wider customer base. But what if the deal fails? What if the integration process is riddled with unforeseen challenges? That's where your problem-solving skills come into play. You'll need to evaluate the financial health of both companies, study market trends and analyze consumer behavior, analyze how competitors might react to the acquisition, structure the deal to maximize rewards while minimizing risks, negotiate favorable terms and craft contingency plans. Think several steps ahead and have a solution ready for every scenario. Risk assessment isn't just about avoiding losses, it's about identifying and capitalizing on opportunities. See the potential in a company or a deal and develop a strategy to unlock that value. This requires analytical skills, market knowledge, and intuition. Connect the dots, identify patterns, and make informed judgments. Be comfortable with uncertainty and find creative solutions to complex problems. The best investment bankers turn risks into opportunities, navigate the investment minefield with confidence, making strategic decisions for profitable outcomes. Let's talk about the heart of investment banking, negotiation and deal structuring. This isn't just about crunching numbers, it's about understanding human psychology, mastering the art of persuasion, and crafting agreements that benefit everyone involved. Imagine you're sitting across the table from seasoned executives, each representing their company's interests in a multi-billion-dollar merger. The tension is palpable, the stakes are high, and every word you utter could make or break the deal. One side wants more cash up front, eager to secure immediate returns. The other side prefers stock options, betting on the merged entity's long-term growth potential. Your job as the investment banker is to find the sweet spot, the win-win solution that satisfies both parties while maximizing value for your client. This requires a delicate balance of empathy, assertiveness, and strategic thinking. You need to understand the motivations and priorities of each party, identifying their non-negotiables and areas where they might be flexible. You need to present compelling arguments backed by solid data, demonstrating how a particular deal structure benefits everyone involved. It's not about playing hardball or trying to outsmart the other side, it's about building trust, fostering collaboration, and finding creative solutions that address everyone's needs. Sometimes it means thinking outside the box, exploring alternative financing options, or restructuring the deal to mitigate risks and incentivize performance. Remember, a successful negotiation isn't about getting everything you want, it's about reaching an agreement that everyone can live with. It's about building long-term relationships, fostering a reputation for fairness and integrity, and becoming the go-to advisor for complex financial transactions. So, how do you hone your negotiation skills? Start by observing experienced negotiators, paying attention to their body language, tone of voice, and ability to build rapport. Practice your own negotiation skills in everyday situations, whether it's negotiating a salary raise or haggling for a better price at a flea market. Remember, negotiation is a skill that can be learned and refined over time. The more you practice, the more confident and effective you'll become at navigating complex deals and securing favorable outcomes for your clients. The world of finance is in constant flux, a dynamic landscape shaped by geopolitical events, technological advancements, and ever-shifting consumer preferences. That's where market and industry analysis comes in, your compass for navigating this complex and ever-changing terrain. As an investment banker, you need to be acutely aware of market trends, industry dynamics, and macroeconomic factors that could impact your client's financial well-being. Let's say you're advising a hedge fund that wants to invest in electric vehicles. This seems like a no-brainer, right? The industry is booming, fueled by government incentives and growing environmental consciousness. But before you advise your client to pour millions into Tesla stock, you need to dig deeper. You need to analyze market trends, identifying growth drivers, potential roadblocks, and emerging technologies that could disrupt the industry. Are solid-state batteries the future, or will hydrogen fuel cells take the lead? How will government regulations impact the adoption rate of electric vehicles in developing countries? Next, you need to dissect competitor performance. Tesla might be the current market leader, but what about established automakers like Volkswagen and Toyota who are aggressively investing in their own electric vehicle lineups? Are there any niche players with innovative technologies or business models that could challenge the status quo? Finally, you need to consider macroeconomic factors. How will rising interest rates, inflation, or geopolitical instability impact consumer spending and demand for electric vehicles? Are there any supply chain bottlenecks or raw material shortages that could hinder production and drive up costs? Your ability to process and interpret vast amounts of information quickly is crucial. You need to be comfortable sifting through financial statements, industry reports, and market research data, extracting key insights that inform your investment recommendations. Remember, in the world of finance, knowledge is power. The more you understand the market, the better equipped you'll be to anticipate risks, identify opportunities, and make informed decisions that drive profitable outcomes. In the high-stakes world of investment banking, not every day is smooth sailing. Sometimes things go wrong, and when they do, they tend to go wrong spectacularly. That's where crisis management and quick thinking come in. Your ability to stay calm under pressure, assess situations rapidly, and make critical decisions with limited information. Imagine this. You're at your desk, sipping your morning coffee, when suddenly, your phone explodes with notifications. A major client's stock has plummeted 30% overnight due to an unexpected scandal. Panic ensues in the market. Investors are jumping ship and everyone is looking to you for answers. Do you advise your client to sell everything immediately, cutting their losses before the situation worsens? Or do you hold on, hoping for a recovery, while risking further losses if the situation deteriorates? This is where your training, experience, and gut instinct collide. You need to quickly gather as much information as possible, analyzing the news, assessing the potential fallout, and evaluating the company's long-term prospects. You need to consider all possible scenarios, weighing the risks and rewards of each course of action. There's no time for hesitation or second-guessing. You need to make a decision, and you need to make it fast. This is where your ability to think clearly under pressure, prioritize information, and trust your instincts becomes paramount. But crisis management isn't just about reacting to unexpected events. It's also about anticipating potential problems before they arise, developing contingency plans, and building relationships with key stakeholders who can provide support during turbulent times. It's about having the foresight to see the storm clouds gathering on the horizon and the agility to steer your client's financial ship to safer waters. As you've seen, investment banking is more than just working with money. It's about analyzing, strategizing, and solving complex financial problems. It's about being a trusted advisor, a skilled negotiator, and a master of the financial universe. If you develop strong analytical thinking and problem-solving skills, you'll be able to make profitable deals, reduce financial risks, and react quickly to market changes. These skills will not only serve you well in investment banking, but in any career path you choose. So whether you're a student or a finance professional, start sharpening these skills today, because they're the key to a successful investment banking career. If you found this helpful, hit that like button, subscribe, and let me know in the comments. What's your dream finance career?